Hello family, hopefully you're doing well guys. What a week, what an amazing week. I believe that you did well where you are, and it's my prayer that even though you never did well, you will find reason to wake up and again and try next week. So if you never did well, that is not the end of your career. So I want to take this minute to welcome you back to this station, and another thing, to always believe in yourself. There is no one better than you. You are going to conquer. It's just a matter of time. Then you will be up to speed. So I want to review what the number of trades that I took this week, what was the logic behind those trades, and then from there we can link up on Sunday so that we can do an outlook for what is to come next week. So remember, you cannot plan without knowing what happened prior to that. So that's why I want to review all the trades I took, around 5 trades or so. I think I was taking 2 trades each day. Yep. So let's roll. What you're looking at in front of you, this is a USD JPY chart. And as you can see this chart here, I will make this as simple as possible so that you don't get caught up with time here. So because this is just a review, pinpointing the main areas, the main things that have helped me to, catch these moves, either buying or, selling. So this is USD JPY 6 minutes, that is 1 hour chart. What you're looking at like this, it might not be so useful until I turn this on. Now that makes sense. Now what you're looking at is a dissected chart now that you can easily understand what is happening. So these lines, the vertical lines, are indicating my days, and I'm using 12:00 New York Midnight Open. So when you go to your 4-hour chart, you will see, sometimes when I tell you to go to your 4-hour chart, the only way to, because once we're done with this one, you also go to your charts, you annotate them just for future reference and study. Otherwise, if you watch this and go, you will never, learn and improve. So this line you're seeing here, this is a buy side liquidity. I want you to go to 4-hour chart and see that buy side liquidity. Top right, see that? So this is buy side liquidity, and this one is here on what? Monday. You remember Monday expanded so high that it felt like it will never come back. But when you go to a 4-hour chart, you realize something. Let me open for you the 4-hour chart. This is the line I'm talking about here, and above it we also have what? A key level, a fair value gap. So manipulation to a key level. So in the 4-hour chart, there's something that now you're very common with, and I'm sure some of you, when you see this one, you're very happy to see it. The last up close candle, the thick last up close candle that takes out liquidity, when you draw that, that is an order block. And you see on Monday, when price came back on Tuesday, what do we have here again? An order block coupled with what? A fair value gap. That is a very key PDRA. Then now this has confirmed reversal. Then in the same 4-hour chart, you see this series of up close candle as price closes below it. What is that? A mitigation block, which is also an order block. Why am I calling this a mitigation block? It is because of what we have here. This is a high, a low, a lower high. If it could have gone above, then it could be a breaker. So this is an order, depending on what you want to call it. That is still okay. But you see, when price is rejecting from there and then we hit, I was targeting this low here. Still price is printing out. I'm anticipating a higher price from here, maybe for a TGIF. Or if it comes back again, there's no harm in that. So when you look at the 1-hour chart, now this is what is coming from the 4-hour chart. I'm doing this because I'm assuming that you had watched the outlook and you know why we are doing this. So keenly, so this one doesn't look like an order block, but when you go to 4-hour, it's very clear. So we had price coming from Monday, making the high of the week, Tuesday continuation, Wednesday continuation, Thursday continuation lower. That's why I'm feeling like if today we can get trade into the range, the better. That will be a nice TGIF. So when you look at this chart, isn't it clear? No noise, but rather a clean chart with just lines and boxes. That is what I do. That is who I am. I don't like to work in a chart that is so complicated and things that I cannot even understand by myself. So you've seen what is happening from 4 hour to 1 hour. So when you go to your charts, you also need to look from the daily and the weekly, or you can just go and watch or watch the weekly outlook. You will be so sorted. If you take out your fib level, take this high to this low here, you realize that price was above the 50% of this range high to this range low. So price above 50% to what? Look at this one here, the 62 level, which is our optimal trade entry. That is our OTE. So entry when? That's when you go to your Fibonacci. Is it Fibonacci? The sessions rather, and check. See now, on Tuesday we have London printing the high of the week of the day, and then continuation lower. On Wednesday, London, New York. On Thursday, London high, New York continuation lower. Now today you see price has printed London low. That's why I was thinking of a TGIF, that the chart that I had sent earlier. So you can see that whatever that I tell you all the time, I'm always working on inside what? The key levels, inside the sessions. It is very essential because it reduces the noise and it gives you some better reasons and logic behind your entries. Okay, so my entry was during the London session, somewhere there, and then I wanted to target this low here, but you realized, and you've realized in a number of times, I don't need to wait for price to come all the way down here for me to take out my profits. And that was a very smooth and quick run down. I think I left somewhere here or this one here, right? So in the 4 hour we also have the SMT here. When USD JPY is taking out this Monday's high, USD CAD did not do that. Okay, so I believe that if you see these things a number of times, the way it is like this is something that you can explain to someone, that we had Monday forming the high of the week, we had an order block, change in state of delivery, we had a fair value gap, OTE, price then started to rally lower. This one is simple as it sounds. That is it. That, like, it is just like that. And I've been saying this. You realize that whatever I do is a replica, is a repetition of last week, this week, next week, last year. I don't fall or become a victim of the shiny object syndrome. When you see, oh, this method seems simpler, let me try this one. You know, dump the one that you've been mastering. You see another one, again you run to that. You can't be good. So the reason why you can see I'm able to, you know, catch this kind of moves is because I understand what I'm looking for. I understand that if I want an entry, I want an entry inside kill zones. And I also understand the weekly profiles. The Monday or Tuesday may forming the high, then the rest of the day is expansion. Friday most probably a TGIF. That was the simple analogy on what happened on USD JPY. This was smooth. You saw I shared that executions on my X page. We shift our focus to USD CAD. I do the same thing, and then we can continue. So same thing here. See that? It's amazing. Yeah. So we had an SMT there. The last up close candle taking out liquidity. That is what? An order block. Remember, this is our 1 hour chart. Even if you go to 4 hour chart, the same case scenario is there. You see, but now you see you cannot. This is bearish. Okay, but when you look at it from the 1 hour chart, it's amazing, man. Right? My target was down here, but we never got to this low. Reason being, I don't know. Objectively, I made my profits, and that's it. My objective is just to execute following um, my rules, which are well defined. So I don't do guesswork in this chart. So the last up close candle taking out this high here. You see this high was taken by that candle there. You see that? So this is another block. Price comes when it closes there. We expect this to hold or 50% and lower quote to hold price downside. So in 15 minutes chart, it's clear now. Hello, look at that, right? So we had SMT, we had liquidity sweep, right? Now you see in 15 minutes the change in state of delivery comes earlier, but I'm okay to follow the higher time frame CISD on my order block. Then you see price comes, breaks below it, retests, and then we had a very sweet drop there. You can always impress this one. You're gonna love this one. So my entry was this one here. It's price closed there. What is this? High, low, higher, high. The last down close candle, a breaker, right? So there, my stop loss was here, and then I targeted this low here. But the moment it started to be choppy here, I think I left that market. Same sentiment as USD JPY. Same logic. You have seen me talking about SMT. You've seen me talk about the last down close candle or up close candle that takes out liquidity. Boom. Entry, stop loss, then wait for my levels to be tagged. Okay. So all the time, and you see, for example, if I could have held all the way to this level here, see price never reached there. So that's why sometimes I tell you, the best thing when you see price is approaching a key level, take off something or just close that. Anyway, you've made enough profit. Why should you always also keep staying there? So, but greed is something that cannot be taught. It's something you need to practice on your own and be content with what the market offers at that given time. Done with the USD CAD, I want us to look at silver, or we can just look at EJ and GJ. This was amazing week. It's an amazing week, man. Like, I loved this week. I don't know how you found it, but man, I loved it. You see, I was just yeah. I don't know about you. Let's look at this one. You see that? Same case scenario. So for this one, I've already delineated. My level is here. You see this low here? This is what I wanted to to target. But as always, you don't need to price to be down here for you to take your profits. Swing lows like this one here. Tell you this, like this one here. This is a target. This is a target here. Another target down here. But now, what is this? Monday, Tuesday, Wednesday, Thursday. Then we have Friday opening here. You see that? Now, I could have waited to see price go all the way lower, but always pay yourself. It's very important. So we have buy side liquidity taken there. The last up close candle taking out this liquidity. If you draw this one like that, that is what? An order block. This order block, we have this fair value gap, another fair value gap, balanced price range. Price comes up, tags that, then dumps lower, right? Price comes up again, the series of up close candle. If you consider this high, low, lower high, that is a mitigation block. If you consider when it's being broken there, only this one from the fair value gap, an order block. See, we are not here to argue about terminologies. And then price respects that and then does what? Hello. And then another thing again, look at this one here. If I could have waited for price to be out, for me to be out at this level here, you see what happened? It reached there and then consolidated the whole night. I don't know whether it's dropping or it's just getting us at EGIF now that Tuesday made the high of the week. How we call this one, I don't know about you, but let me show you something here. What is that? London. That was my entry there. That was my entry. Stop loss was above here, and then I target this low, but I never waited for price to come down all the way to that low there. What am I trying to say? Same case scenario, same analysis, same logic, time and price meeting, then applying the logic, executing inside kill zones. Like, I don't know, that is something that you should all the time impress, and all the time do that, and you'll be amazed. So when price closed below this low here, I reduced the stop loss to break even. When it when it closed below here, that is when I sent you a chart. My stop loss was here. Someone said that I was about to be stopped out. No, the logic was when it closed below here, break even. When it closed below this low here, and then I trailed there, and then let it do what? Let it run. Somebody figured it out, and I loved that. Somebody was saying, oh, you could have been stopped. No, but that's nice to see things happening like that. So Tuesday, high of the week, smart money reversal. This is the original consolidation. I expected price to actually take out this, but I don't know. If it does that, the better. If it doesn't, we already made the best out of the week. Simple, clear, and precise. Man, you need to be happy this year. This is amazing year, man. Then we go to GJ. Same case scenario here. So I had to put on the annotation so that, you know, a review should not be something that is taking forever to, you know, to be done. So we hit this inversion there. So the same scenario, Monday, Tuesday, high of the week, right? Then price does what? Melts down, fair value gap. And you see, I want you to remember something here. If you've been following ICT keenly, and not just following but going to the charts and proving things, when you see fair value gap like this, two of these ones here, the best thing is to enter the first fair value gap when you're selling, but your stop loss should factor this one, should be above the upper fair value gap. Did you get that? I don't know, man, but I believe you did. Okay, so price also does what? Melts down, taking out this low, fair value gap there, order block, price comes down, fair value gap goes down once more, and then clears this low here. So we haven't reached our zone yet, this low here. If it does that, okay. If it doesn't, that's still okay. Okay, so if you go to 15 minutes where my entry was, I can tell you that sometimes you need to be patient. Patience pays, man, right? So if you look at this one here, we open our sessions like that. What are you seeing here? So weekly open here. Remember, when you're bearish, you want to see price go high to go lower. Weekly profile, right? So Monday goes high, Tuesday to a key level, and then we have smart money reverse there. Price comes down, low risk sell, the first stage, then second stage here, and then takes out this lows here. Could have waited for this price to dump lower to this previous week's session low, Friday, but still we can't dispute that it is not going there. If it does, okay. If it doesn't, we had already done the best, or we've already made the best out of this market. What did you see I did there? Same logic, same time frame. We have to marry or merge the time frame alignment. Number 2, you should know which day of the week. Number 3, you should know session. And then you do your thing. Entry, stop loss with the right risk management. You let the market do its will. You go to the chart, to my X space, you'll find the execution charts there from my account, right? So let's see whatever it wants to do, and then we can probably call it a week. But this one, that is enough. That is enough for me. You don't need to be all the way in that trade to your end. And the moment you learn this is the best thing to pay yourself, you'll come back here clapping and dancing, guys. It's amazing. It's amazing, right? So that is EJGJ. Then I think I took a trade on EGU. I hit buy. I love this one. Come with me. Come with me. See this one, man. On a daily chart, this one I have to start from here. So on our daily chart, so this is Monday coming and tagging our daily fair value gap. I expected better expansion to those highs, but that did not happen. But did that stop us from making moves? No. Now you go to daily, then 1 hour. Yeah, this is good. So I was in this. You see this shaded part here. That 4 hour FEG, actually I know it lied to many. A number of people sold here, but you see this is 4 hour chart. You can't compare a 4 hour PDRA to be stronger than a daily PDRA. The higher time frame PDRAs are always strong. So what are you seeing here? The last down close candle that took out a low order block. Draw that there. Price comes in above 50%, you see, of the order block, and then hello. So all this one are potential targets because we have a low resistance liquidity run. Okay, this is it like that. So Monday, I never touched Monday. Then Tuesday, now I was waiting for price to do what? Close above there. What is this time here? London open there. I was inside there and I targeted. I wanted it to go all the way, but the moment it took out at this first high and the second high, guys, I was very content. I left. This is clean. Then you see from there it started to be choppy. 2 days, Wednesday, Thursday, Friday, nothing good here, right? So did I change anything? No. Did I follow the rules? Yes. Did I use the same concepts that I usually tell you? Yes. Then when you make a mistake, which we cannot avoid, but there are mistakes we can avoid when you know what to look for in this market, these markets. Beautiful. This is good. This is good. No one can dispute this one. As simple as a cock on a hen. Lastly, I want us to look at silver. I think I took another trade on silver. Yep, silver is amazing, right? So I took advantage of this trade. Now why? 4 hour chart. What do you see? The loss taken there. When this candle closes, remember we said if it does not tag, and okay, there are people who are good in turtle swooping. I don't have a problem with that. But for me, I wanted to tag. When it closes, my target was this. I did not want to go all the way high. I was targeting this. The only way we could have gone higher is when this fair value gap here gets inversed. Price closing above it, like this. And then it being used as support to take out price to those levels. Okay, so but I was okay to take out my profit because it's a higher time frame key PDRA from external range liquidity to internal range liquidity. I hope you saw that earlier before I mentioned it, right? So on a 15 minutes chart, this is where things boiled nicely, man. I don't know, man, but this is good, right? So we have, you see this candle close, then you do what? We had a minor sell side liquidity here. You see this one here? Yep. So when price closes above this one, this is an order block. But again, you see all this series of down close candles there? That is what? A change in state of delivery. Remember, my objective was the fair value gap. See that? So before you've realized price, yes, it has tagged a key level, it has caused a change in state of delivery or market structure shift above here. Then what now? Time. All these things that I'm doing, they require patience. You run, you break your neck. You see that? What is that? Hello, right? So this has confirmed reversal. Okay, when price closes above here, you see, and it had already tagged this fair value gap if you're keen there. Yes, and then it goes higher, causes market structure shift. What do we have here? Another small fair value gap there, but you can see how the bodies, you can see how the bodies are not closing below that. It's small but very powerful PDRA. Price goes higher, comes down. Now you see this is a fair value gap. The best entry if you missed turtle soup, inversion, change instead of delivery or order block, breaker, FEG. If you miss this one, how do you enter? When price closes above this down close candles here. This forms a fair value gap. The down close candles, when price closes above it, that is an order block. Order block plus FVG. Merry Christmas. This is good. That is, if you've been here, you know that is how I trade the fair value gaps. I want to see the price rejected and close above the down close candles or below the up close candles when I'm bullish and bearish. From there, I took my entry, as always. When price is coming down, when it was almost approaching this order block, that I was in there, and I got out there. Now, somebody, I saw people saying, then why, like, are you, is your, how come you are able to, you know, catch these moves so flawless? See, sometimes I tweet a chart and you wonder, price is there. It is because I'm patient, guys. I am patient, extra patient, because I know when you are furiously looking for a setup, that is when your stop loss hits very fast. Come back online, so boring, and you start abusing people there. You become a bot. But when you are patient enough, what is this? This is liquidity sweep, market structure shift, fair value gap. Hello. Did I mention anything new that you've never heard me talk about? The answer is no. Everything that I do, they are the same things since day one. Took 6 trades in 3 days, so 2 trades in each day. And that's it. If I miss a setup in London, I'm hunting a setup during New York. If I don't find any of the, you walk. You don't need to force a setup. But you see, when time aligns with price, you look at how flawless this is, man. No one can dispute that. No one. That is something that you should impress. And I believe, I'm hoping, and I've seen guys starting to tag me along with their payouts, tag me along with their passing their funded accounts, and that's a good feeling. That is all. Yeah, those asking whether I have some mentorship or no, I don't. My bio is clear from my experience. I don't do that, and I never do that. I'm content with this one. I'm content with what the market offers to me, and that's it. Like, I don't have time to sell shit, and there's free knowledge here. So whatever I'm giving is just out of goodwill, and hoping that you can make the best out of it. And as I always say, if you don't find this information useful, pass by ICT's channel and learn better from the mentor himself. Remember to tap the subscription tab there. Share this channel to people who feel they need this, and you can leave a comment too if you're finding this work amazing and useful. But one thing I'm sure I'm okay with, people are saying things. Man, that's good for me. People are saying things, and that means something to me. Like, all I'm doing is not going to waste, guys. Hopefully you found these executions flawless, simple, easy, and brief to the point. Until next time, see you on Sunday for the next week outlook. Be safe.